Welcome back to Nexus Echo, everyone. Today, we're diving into a game-changing topic, AI in FinTech. We're exploring how artificial intelligence is transforming financial services and what that means for us as consumers. From automated loan approvals to personalized investment strategies, AI is here to shake up the finance world. But what are the risks, and how do they impact our daily lives? Well, let's get into it. So, let's break this down. What exactly is autonomous finance? It's more than just online banking or smart budgeting apps. We're talking about financial systems powered by AI that operate almost independently. Imagine an AI that manages your savings, invests your money, or even advises you on spending, all without human intervention. Sounds convenient, right? But convenience often comes with a cost. Also, banks and financial institutions are already using AI to streamline services. Think about chatbots that handle customer inquiries or algorithms that approve loans in seconds based on your financial history. This level of automation means faster service and fewer errors. But what about privacy? With so much personal data involved, how do we protect ourselves? That's a question we need to consider as this technology evolves. From another point, let's talk about how AI is impacting jobs in the financial sector. With automation handling routine tasks like data entry, fraud detection, and even basic financial planning, many traditional roles are at risk of becoming obsolete. But it's not all doom and gloom. New jobs in AI development, cybersecurity, and data analysis are emerging. However, the question remains, are we ready for this shift in the job market? And more importantly, are workers being trained for these new roles? Well, okay, what next? AI in FinTech doesn't just affect the banks and their employees, it directly impacts us as consumers. Think about AI-powered financial advisors that can manage your portfolio based on real-time market data. While this sounds great, we must consider the biases in decision-making. AI systems learn from historical data, which can include prejudices. If these biases go unchecked, they might influence things like loan approvals, potentially leading to unfair practices. So, what does this mean for everyday people? AI could make budgeting, investing, and even saving money much easier. Imagine an app that automatically tracks your spending, suggests where to cut costs, and invest your savings based on your personal risk tolerance. That's the power of autonomous finance. But there's another side to it. With so much reliance on AI, what happens if the system fails? And who is held accountable for mistakes or financial losses? These are critical questions we need to answer as this technology becomes more widespread. Here's a fascinating fact. Did you know that AI algorithms can now analyze market trends and make trading decisions within milliseconds? This process, known as high-frequency trading, allows investors to capitalize on market changes faster than any human could. But this speed also introduces new risks, like market instability. What do you think about AI having that level of control in financial markets? You can share your opinion in the comments. Now, let's dive deeper into what we at Nexus Echo believe. AI in FinTech is not just a technological evolution. It's reshaping how we perceive money, savings, and financial freedom. We believe that, ideally, AI should serve as a tool to democratize finance. Think about it. Traditionally, personalized financial advice was something only wealthy individuals could afford. Now, AI can provide this service to anyone with a smartphone, regardless of their income level. It opens up a world of financial literacy and investment opportunities that were once out of reach for many. This aspect excites us because it means closing the gap in financial inequality. However, we can't ignore the potential risks. One of the biggest concerns we have is around data privacy. As AI becomes more integrated into financial services, vast amounts of personal data are required for accurate, personalized recommendations. Who controls this data, and how secure is it? We believe that stringent data protection regulations must be in place to ensure consumer safety. Without them, the benefits of AI could be overshadowed by massive privacy violations and even identity theft. From another point, let's consider decision-making biases in AI. AI learns from historical data, which, unfortunately, includes human biases. If AI systems are used for things like loan approvals or credit scoring, they might inherit the same discriminatory patterns we see in traditional financial systems. For instance, if historical data shows a bias against lending to certain demographics, the AI could inadvertently continue that trend, leading to unfair practices. We think this is a critical issue that needs addressing. Developers and regulators must ensure AI models are transparent and regularly audited to prevent these biases. What about the future job market? Well, it's a double-edged sword. Yes, AI will likely take over many repetitive financial tasks, which could mean job losses in roles like bank tellers, loan officers, and even financial analysts. But we also believe that new roles will emerge, roles that focus on AI oversight, ethical programming, and data security. So while there's an element of risk, we think the workforce can adapt if given the right training and education. It's more about transitioning rather than eliminating jobs. Okay, so what could happen next? In the next 5 to 10 years, we predict that regulatory frameworks around AI and finance will become much more robust. Governments and financial institutions will likely work together to create standards that protect consumers while still allowing innovation. We might see regulations that require financial AIs to explain their decision-making processes, something known as explainable AI. This would help ensure that automated decisions like loan approvals are fair and can be reviewed for potential biases. In the long run, let's say 20 to 50 years down the line, autonomous finance could become so ingrained in our daily lives that manual financial management might become almost obsolete. Imagine a world where your AI financial assistant monitors your spending, automatically invests your savings, and even negotiates better deals on your bills, all in real time. But here's the twist. The more control we give to AI, the more we, as consumers, must demand transparency and accountability from these systems. If not, we risk creating a financial ecosystem that's efficient, but not necessarily fair. Ultimately, we believe the future of AI and fintech hinges on balance. A balance between innovation and regulation, automation and human oversight, convenience, and security. For this transformation to truly benefit everyone, developers, regulators, and consumers need to work together. It's not just about creating smarter algorithms, it's about building a financial world that serves people equitably. Now it's your turn to weigh in. How do you feel about the rise of AI in finance? Is it something you're excited about, or are you more cautious? Let us know in the comments. And if you found this video insightful, please give it a thumbs up. Subscribe to our channel and hit that notification bell. That way, you'll stay updated on our future tech explorations. Thanks for tuning in to Nexus Echo, and we'll see you next time.